Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, May 29th, 2020. As always, please hit the like button, subscribe to this channel, and share this video with others. Stocks are more likely to make new highs than new lows. I think they are breaking out to new records. So we're going to look at a couple of sectors, such as technology and discretionary, which are considered high beta or high volatility sectors, and they are also moving to new records. This is very good for the stock market in general. European equities are also very close to a new breakout, so we'll look at that. We'll look at trade example recently. Target, it's up over 15% since recent alert. Junk debt is signaling continued bullish posture, so I will be looking to buy. We're actually already buying junk bonds. Short-term bonds are breaking to new records, and we may see negative rates soon, despite what Federal Reserve says. And muni bonds show a real cool support resistance pattern, so we'll look at MUB, Municipal Bond Fund. Then we'll switch gears and we'll look at the dollar, which could be getting ready to enter a bear market. And silver, again, I'm going to highlight silver this time. It's showing very bullish pattern, and also Bitcoin is showing quite a bullish pattern as well. So throughout the presentation, I will be using my proprietary trading indicators, which are called Master Charts Trading Indicators. Here they are, Master Charts Trading Price Action Indicators. Now you can have the same lines, this green, blue, red, and yellow support resistance lines, which are calculated electronically. It's a mathematical formula that's built in to this indicator. You can have the same lines on your chart simply by going to Master Charts Trading, clicking on sign up and selecting trading indicators, then subscribe to them. Once you subscribe, I will open the door for you, and you can have the same lines on your chart on TradingView interface. This is where I'm hovering, TradingView.com. TradingView.com is free, so you can have them on your chart. All you have to do is sign up on my site, MasterChartsTrading.com. Alright, so S&P 500 seems to be breaking out. We already are buying it. I have switched some of my retirement portfolio into the stock market, and we're hearing pretty bad news about unemployment, about suffering, death, insecurity, and now we're also seeing riots break out in some parts of the United States and actually worldwide as well. Now these riots are, right this instant, are caused by discontent about killing of a black person in Minneapolis by a white police officer. But I think the tensions have been simmering for a long time, and I strongly believe this has to do mostly with inequality, and financial inequality is at the heart of it as well. So I think the government will need to take a hard look at some of the social programs and possibly implement them on much broader scale. For example, universal basic income most likely will be needed very soon, and of course universal healthcare insurance in the United States, even though it could be considered a socialist quote-unquote concept, it is needed because people who are out of work also don't have health insurance. Besides the point of this today's presentation is showing that we're seeing stock market participants push the stock market prices higher. In other words, they're thinking that whatever is happening most likely is over, and Federal Reserve has been extremely helpful, basically printed billions and trillions of dollars to fill up this hole, this crater, and it seems to have been successful. So looks like they are indeed being successful. and this is actually happening worldwide with just tremendous stimulus coming from all around the world. Europe, Japan, China, United States obviously as well. So what we're looking for is we're looking for a follow-through. We're not that far off from record highs. I think record highs could easily be hit within a few months actually. Dow Jones, so same general principle. We're seeing a breakout on Dow Jones. Again, an actual alert to my subscribers. Resistance at 25310 was overcome. How do I know there is resistance at 25310 for Dow Jones? Because my indicators actually are showing you the resistance. There it is, the blue line. So we're now seeing a breakout above resistance. Support has held at 22471, and now we're most likely going to continue to new records. Again, I don't know when, and I don't know how it will reflect on events on the ground, with the real economy and real people. But the way the stock market is acting, it is acting bullish right now. Nasdaq, the QQQ, is actually like not even 1% away. There's the record high that was set in February 19, and now we're so close to it. Look at this. So this whole crater collapse here in March was basically negated, and the Federal Reserve has been extremely accommodative, and it seems to be working. So we are looking at, again, there's the alert on 14th of April, and you had several opportunities to get in still, as late as maybe you probably could have gotten in around May 4th here, and there's a nice move higher. So again, if you opened recently, congratulations. A couple of really high beta sectors, so XLK Technology. An actual alert was also sent here on the 29th of April. So there's the breakout, and it's about 9% move in your favor. So XLK Technology together with XLY, here's XLY, this is consumer discretionary, and again, a couple of opportunities here, and they're both moving higher. So these two sectors are extremely high beta. They are high volatility, and the investors usually buy these stocks when they're pretty sure about the future, and in this case it seems that investors are betting that the future is rosy, even though we're seeing pretty nasty events on the ground right now. So overall, let's trust the stock prices, let's trust the chart, let's trust our support and resistance lines, and we're going to be buying on breakout above resistance, which was overcome here. For example, for XLY discretionary, the resistance was overcome here, the blue line at 113. You can find out more about these lines at MasterChartsTrading.com. Here's VGK, European equities, diversified European equities. So VGK, European equities are also approaching a breakout level. They are lagging United States equities, probably because they're still arguing about how much money they're going to print, and they're not printing nearly enough. So in order to, they need to fill up this crater, and they need to fill up this crater with cash. So it's approaching the breakout. It's really close. I would be watching for a close above the blue line at 50.54, and that would be a signal for me to buy. Here's a trade we recently did for Target. So I picked Target because Target was recently looted in Minneapolis, and I think some other parts of the country, again, looting and riots are breaking out. Very unfortunate events. I sympathize with the protesters. I'm not sympathizing, with the looting, of course, but there was a lot of pain, a lot of suffering, and I think the biggest thing is inequality. In the United States, the inequality is surprising. How rich the country is. What are the United States spending the money on? Definitely not on fighting inequality. And they're spending the money on fighting something else or someone else. So target, here's target alert. First alert here was sent on the 14th of April where I'm hovering. A second alert was sent here on the 4th of May, and this is about 15% gain. So again, congratulations if you opened target recently. And I will be holding this position still. Junk bonds, so junk bonds or high yield bonds, they correlate highly with the general stock market. What does that mean? That means that stocks and junk debt, junk bonds, usually move together in lockstep. So if stocks move up, junk bonds would follow, and vice versa, junk bonds moving up and stocks following. So in this case, junk bonds actually broke out earlier. They broke out on the 9th of April, while S&P broke out on the 29th of April. So in this case, junk bonds were leading the stock market higher. And here's another alert, and I actually bought myself here as well on 22nd of May, and I bought some into my retirement accounts. So overall, I think the picture for stocks is bullish currently, and we are positioning our portfolios accordingly. In other words, we are buying, we are not shorting. Let's switch gears to bonds. So TLT, Treasury bonds. This is a kind of like a safety oriented security. People buy Treasury bonds if they think the economy will not do well. Also, people buy Treasury bonds if they are going up, regardless of the economy. So in this case, there are multiple opportunities. For example, there was one here on 21st of January, which resulted in a huge win. You can see how far it went. Another opportunity, an actual alert here on 20th of March. And I'm waiting right now for the price to come down towards the blue line so we can start buying it again. But overall, treasuries are clearly in an uptrend. BSV, so this is short-term bonds, and you can see they are at new records. So short-term bonds breaking out to new records, and here's the actual alert on the 24th of March. This is showing a risk aversion. It's a weird market because we have stocks and bonds going higher, so it looks like we have everything going higher. Perhaps this is a result of interference from the Federal Reserve, and this is just the way things are. So we're not shorting bonds, obviously. We want to be buying them. So we bought them here back in March. Very cool pattern. I want to highlight here for MUB. So again, put my indicators on, and there you are. You can see now clearly at what price level you want to be buying, at what price level you want to be trailing higher. So you can see this is an actual alert again, 27th of April, another one here on the 7th of April. But the way it just comes down right to the blue line, right to the support resistance line, and then just bounces off of it. Currently ran into actually overcame resistance, but it's a very cool pattern. So the only thing I can say is it's a cool pattern, and we are trading it as well. So municipal bonds seem to want to go higher as well. Right, let's switch gears. Here is DXY US dollar currency index. Vast majority of this is about 50% is euro. So you can see price came down towards the red line. So for Forex, I'm treating the support resistance, the red line, as a line in the sand where I would start shorting, selling it, which is approaching it right now. So euro by extension is doing the opposite. Euro is euro versus US dollar, you can see it's approaching the blue line, the resistance line. So if it closes above the blue line, I think it could easily continue, you know, to take out this highs from the March. Yeah, it's possible. I mean, looks like we did not, you know, you can see there's downward facing arrows. Again, those are actual alerts, but you can see that there was no new lows. So here at the yellow line, you can see 1, 2, 3 times the support was held, and now we rallied. So there is a good possibility that euro will be breaking out now to the upside. By extension, the weakness in the dollar, so you can see here silver XAGUSD, so silver over US dollar. So if the US dollar is getting weaker, silver is getting stronger, and you can see a nice, very bullish pattern. This is a bullish pattern. There is the breakout where I'm hovering, 15th of May, pull higher, couple of hammer candlesticks, and another rally with a new high and a close at new high. So this looks like a very bullish pattern to me, and it could actually break to new highs as well. New highs are not that far off. And then finally Bitcoin. So Bitcoin, I actually bought myself at 8852 here on the 12th of May. Another opportunity was back in April as well. But it does look very positive. It looks very, this looks like a bullish chart to me. Notice where before we were shorting it. So for example, here's an opportunity back in March, and it was good for 56%, and now it's possible we're going to break out from here. So I'm very bullish on Bitcoin right this instant. Alright, that's it for this week's recap. If you haven't yet done so, please head over to MasterChartsTrading.com. That's MasterChartsTrading.com, one word. And click on sign up, where I'm hovering, and sign up for one of the services. We have 3 different services. We have alerts, which is basically a newsletter. We have trading indicators, and we have newsletter and trading indicators. So I think they're a great price for the alerts. You can get them for $24.95 per month. You get alerts about all of these various stocks and various securities. If you're ready to trade on your own, then sign up for trading indicators. At $24.95 per month for yearly billing, I think it's a steal, and you can make your money back in probably 1 week if you just play your cards right. And then alerts and indicators, both together, so you get not only the actual indicators, you will also get the alerts and my examples of what we trade. For example, here's example for target, and this was pretty straightforward, 15% gain. Alright, that's it for this week's recap. Again, if you have any questions, please send them in. Thanks for watching, and have another great trading week. Bye bye.